Hey, good morning, everybody. Welcome back to Moving Our Vets podcast. I'm Isaac Contreras, and I've got with me my partner in crime, Travis Lang. How are you doing today, Travis?
I am awesome. Good morning, everybody, and excited to talk this morning. We got some good stuff we're going to talk about.
Yes, we do. We're still in that understanding the pre-qual process, understanding the benefit itself. So,
Yep.
We're going to talk a little bit about entitlement, right, Travis?
We are. Yep.
And then we're also going to talk about loan limits, which is pretty exciting. I'm sorry. We're going to kind of geek out a little bit. Hopefully we can. It's exciting stuff for us because we see it. We see the tool that it can be, this VA benefit. We see the tool that it can be to, that wealth creation, that stabilization, that movement when, even if you're active duty, moving from one duty station to another, maybe you're trying to move back home and transitioning out. Like, it's a very powerful tool to do that stabilization that many of us miss out on when we have a career, a 20-year career, 30-year career. I don't think they do 30s but a long career, right? Or even if it's the 4 years stint, but some of that stabilization. But tell me about entitlement. So I know that's kind of a big word and it can mean a lot of things, but when it comes to the VA benefit, the VA home loan, explain to me, Travis, what that entitlement means.
Yeah. So when a VA member has their full entitlement, that means that they can do a VA home loan up to, this is crazy. So I'm going to throw this out to you guys. It changed a few years ago, but when you have your full entitlement, that means that you can do a VA home loan and you can do it up to the max loan limit that is allowed. So that means that it'll show up on your certificate of eligibility that either you or your lender can get. And right now, you can actually go up to 1.5 million. No money down, money down. It's called a VA high balance, 100% financing, but you have to have your full entitlement, meaning that, you served your time or you're still are, and you've never had a VA home loan that's went into foreclosure, and you don't currently have a VA home loan, or if you do, you'll restore it by selling and rebuying that same day.
Okay.
So might have thrown a little bit in there, but we can break that down in a second. But basically what I want everybody on this call to know is if you go to the right lender that doesn't have any overlays, that just has to meet the Jenny May VA handbook guidelines, as long as that lender that you're going to services direct with Jenny May, VA now allows up to 1.5 million, no money down.
Wow. So what else? What else? No money down and no mortgage insurance.
Yep. No PMI. That quote unquote, people say, what's PMI? Private mortgage insurance. So you don't have to pay a monthly fee because you're not putting the 20% down like on a conventional FHA or USDA loan. VA does not have any PMI, which is amazing. I mean, that's sometimes a couple $100 a month in savings. But no PMI, no money down, and it's incredible. It's absolutely amazing. Now, with that entitlement, a lot of people, I get this question all the time, so I kind of want to throw it in right now, if that's okay.
Yeah.
I get the question, hey, I haven't done a VA home loan before. I don't want to use my one-time VA option. And I say, oh, no. VA, your eligibility and your entitlement, it's not a one-time and then you're done. That's for a first-time home buyer loan through a housing product through the state that you're in. That is not a VA home loan. You can keep reusing and redoing your VA home loan as long as you're selling your current place and then buying another one that same day. Your lender restores your entitlement for you, shows the documents that this one sold, got paid off, now your new VA loan starts, and then we send that paperwork off to the proper channels for you. You don't have to worry about it, or you don't have to call VA or anything. And then you can just keep doing your VA home loan. I have some clients on their 10th VA home loan sometimes. they're probably
They
they've done
got
some
ants in their
refinances
pants.
in there. Well, they've done some refinances in there, or they've moved like
Sure.
3-4 times. So
Yeah.
it's amazing, right? And so that is a kind of what your entitlement is.
That's super powerful for a couple of different reasons, because for you active duty brothers and sisters who are making a career out of this, and you're moving, you get new orders every couple of years. And if those new orders move you from one part of the country back and forth to different bases, to different forts, camps, you can buy, in Norfolk, get orders to Sandog, sell that house, get new ones, and then even going into a new market, because you're going to have a new COLA, right? You're going to have, I don't remember what it's called. I know we used to call it COLA back in my day, but cost of living allowance. But then you have your housing entitlement and stuff like that. That grows with your geography, right? Your geographic location. So when you get that new place, let's say you go to a higher cost of living area like a San Diego, now suddenly, if I was stationed in Georgia or Florida, right, where I might buy a house for 300,000, that same house is now 500,000, but because it's a VA loan, there's not no limit, but you have a higher limit, and you can buy that no money down and no MI, and you have bigger purchasing power. But I wanted to ask you, and this is an active duty question, right? Because you get that housing allowance, right? How do you guys handle that? How do the lenders typically handle that?
Like your BAH, you're talking about the housing allowance that they get on their checks?
That's what it is, BAH, yep.
Yeah, so we can use, so it's ever on your monthly LES statement, your pay statement. If you get BAH, we can use it as a lender on your VA home loan. It is considered income, and we can use it. Now, sometimes it might be in the middle of changing. Because you're moving, whatever's on your current LES, we can use. Now, if you can get documentation to us of what it's going to change to when, and you can get some paperwork to solidify it's about to change, and here's the proof and here's why, we can use that. It can get a little bit tricky, but we can use that new upgraded amount that you're going to be receiving once you move. As long as you qualify, which a lot of my clients in the past, when we ran into this subject, we've used what they're currently getting, and it's usually enough to qualify for the payment and the loan. So we don't have to get too dicey in the paperwork, but yes, we can use that.
Outstanding.
Yeah.
So that entitlement piece, there's a couple things I want to unpack with that. That entitlement piece, and this is that tool, right? The tool piece. So if I wanted to, let's say I wanted, and this is active duty and not active duty, whatever, just vet, as long as you qualify, you got that COE. I could buy a house today using my VA benefit, right? And then let's say in 3 years, I want to buy another house, but I want it to be VA. Can I keep them both? That's the question. Can I keep them both?
I'm glad you dived right into this, because I was going to start talking about it a few minutes ago. So here's the other big misconception. Yes, to answer your question, you can. You can have 2 VA loans at the same time. We do it all the time. A lot of people don't think you can. But in the instance, VA does allow, if you own that house, like your example, you own your current house, you're moving, and now you want to either rent out that house or just keep it, maybe as a second home, but you're moving. As long as you're going to be occupying this new house as your new primary residence, you can buy it as a VA loan. Now, here's where the part you need to understand is now, yes, two VA loans at the same time, absolutely. If both balances are under 548, no money down on this second one. So let's say your current VA loan is, just to make an easy number, let's say it's 200 flat. That's your current entitlements being used up on that first house. You're moving, and now you're buying a house in a different state, for 300, that's 200,
Yep.
300, that's 500. You can buy that new house on VA, no money down, because it's under 548, and keeping your other one and renting that one out and moving into the new one. 2 VA loans, same time. That's amazing. Now if it's over 548, let's say it's the new one is not going to be 300. Let's say it's going to be 400.
All right.
And the other one's 2. Now you're up to 600 total.
Okay.
And proposed VA mortgage debt.
Okay.
The lender takes the difference, which would be that 600,000 total entitlement used up, minus the 548.
Okay.
And then the home buyer has to take 25% of that difference in a down payment. So the VA member can still do a VA loan, VA. So take advantage of the no PMI, take advantage of the really awesome interest rate, which right now, by the way, the VA home loan interest rate on the market is lower than any home loan program. So
all right.
Sometimes I've heard clients tell me this, and it makes me upset because I want the truth out there. Lenders tell people, VA, their rates are higher. No. They're always been lower, and they're like 0.5% lower than conventional rates right now, and they're like a quarter lower than FHA. So the VA home loan program in the country is the best home loan product, if you qualify for it, than any loan program. Don't ever let somebody tell you otherwise. I love that. It's not true. I
love that.
Yeah. So to that example, if you're like, well, I heard I could do 2 VA loans at the same time, but now this lender's saying I have to put a little bit of money down. That is true if that second mortgage is going to be more than that total of 548. So on this example of 600,000 in total debt, you take 600 minus 548, that's 52,000.
Yep.
And you take that times 25%. So that client is probably going to have to put down about 13 grand on that new VA home loan. Okay. So people look at that and they're like, oh crap.
That's what I got here.
Yeah. So there's a set formula that your lender will plug in based off your exact scenario with this new house purchase. And then they'll tell you the money down that you need. But it's still better for sure than doing a conventional loan. Still.
Yeah, because 10% down, let's say on a $400,000 house, 10% is already 40 grand.
Yep.
You match that up with, I didn't know about that. I knew about the loan limit, right? That $548,000. Mm-hmm. And so, if you can cram it into both of them underneath that limit, you're golden. But I didn't realize that there was an allowance above and beyond that. That's super interesting.
Isn't that cool? So cool. Yeah. So I had a guy last year, I remember, a good example to tie into you guys as you're listening to this call. He was like maybe about 100, 200 grand over. And I remember quoting him like around 20 some grand down. And he's like, oh, yeah, that's still way better than a conventional loan at 5% down. 5% down was going to be like, 30 grand. So it's gonna be like an extra 10 grand out of his pocket. And then remember, on conventional, he would have had PMI.
Yeah. Yes.
Because he's not putting 20% down on a conventional loan. So, and he was told by a friend, go conventional. I'm like, no, you can do 2 VA loans. Let's break it down. So I saved him like almost 0.5% on the rate and about 10 grand less on the down payment and no PMI. So 2 VA loans, same time, have your lender walk you through it. It's incredible.
Outstanding. So let me ask you this. So it's a great tool. We know that it's got to be your primary residence, right? We do know that. That's key. So however you're formulating your plan, make sure that that's one of the main components, right?
Correct.
You mentioned foreclosure and that entitlement. So there's a lot of us vets who went through that housing bubble. There was so many people that got just really super, just incredibly beat up.
Yeah.
After that housing bubble, when Lehman Brothers and Countrywide and all those folks, just New Century, all of them, they just went under and they left us all in the bag. And there's a lot of vets that had to foreclose, that had foreclosures on their houses.
Mm-hmm.
Okay, and I know that there's a number of them that are just within the last, since about 2014, maybe 2012, 2014, have gotten that confidence again to actually get back out there and get on the housing market and start buying again.
Mm-hmm.
But they had a VA loan and it went foreclosed, right?
Right.
Can I get a VA loan if I foreclosed on my VA loan? Can I get another one?
Yes, you can. But what will happen is, yes, you can. But what will happen is the lender is going to pull that COE, and right in the middle of it, it's going to have that delinquent loan that happened on that foreclosure. And then it's going to show how much of the entitlement that you had that got affected by that foreclosure. And then same like this other example, what's going to happen is the lender is going to have to plug in what you have left on your entitlement, and then send you a number and say, okay, you foreclosed on like a $200,000 house, let's say.
Yep.
So
there's a lot more of them then.
Yeah. So yes, but then the lender's going to restrict you on this new VA purchase on how much you can go up to with no money down. So what a veteran active military member can do if they had a previous foreclosure, you can restore your entitlement is what it's going to be called. Okay. So let's say you want to buy like a $500,000-$600,000 house. Well, because you had that foreclosure, there's a percentage of that other mortgage that VA wants back from you to restore your entitlement again. So I'll explain it to you like this. When that COE comes in and it says back in 2007, you had this foreclosure, it'll show on there. I'll plug that number into this VA calculator, and then I'll be talking to the member and saying, okay, it looks like you can only go up to about 300 something for no money down because this entitlement was basically damaged with that foreclosure. VA is not going to allow you to go back up. You don't have your full entitlement anymore because it got a big chunk of it got hit by that foreclosure. So if you buy a house in this price range, yeah, you can go VA. But if you're trying to max it out and it's been 10 years and you're like, ooh, shoot, is that foreclosure going to affect me? It might, and it will if you're going to try to max out that 548. But check this out. The percentage, So what will happen is if you're trying to max that out, depending on how much that previous foreclosure was, maybe all it's going to cost you is $7,000 to maybe $15,000 to restore your entitlement again, right? So it's going to be based off that current or that previous foreclosure. So you'll tell your lender, hey, I had a foreclosure. He'll see it. He or she will see it. It'll pull up. It'll be like, oh yeah, back in this date. Okay. So based off of this entitlement hit on that previous loan, VA is only going to allow you to go up to here unless you're willing to write out a check for this amount, and then we can restore your entitlement, which will just be due at the closing day. So a story. I'm being reminded of a client of mine this summer. Actually, it was like May or June, and to restore his entitlement, it was only going to cost like $8,000 or $9,000, which is still less than the basic conventional 5% loan or an FHA loan. So he was able to write out that check on the closing day for $8,000-$9,000. It then restored the entitlement from that old foreclosure. And then he was able to do, a higher loan amount and still go VA, still get the low rate, still no PMI. He just had to restore his entitlement. So it's kind of like a lingering thing that came up, but he was able to still do it.
Okay, that's huge, man. That's huge. That's so I'm this is why we're having this conversation because like I've got a clue. Like I understand some things and I know some things and I give that best guidance.
Right.
But some of those details, I didn't know about that that ability to go above and beyond that loan limit. That's huge, right? That's a great tool. And then being able, I knew you could have more than one, but I didn't know how you could restore. I knew it could be done, but I didn't know how you go about restoring. So
Yes.
kind of as we wrap up this episode of moving our vets, right? A couple things we want to remember is one is we do have a $548,000 loan limit if we use more than one loan, right? You jump in if I'm getting something wrong. But as far as that in that ability to purchase, I could go out and, provided my income supports it, I could literally go out and buy a $1.2 million home, no money down, no PMI, so long as my income can support that, which is actually something I just helped somebody do last week, which is fantastic. They bought a brand new custom built home over here in Minnesota and $1.2 million and no money down.
So cool.
Another one was 700,000. But even, I mean, this is sweet all across the board, whether you're doing 185 or you're doing 285, any one of those numbers, keep no money down, no PMI. Huge. Plus, something that I found is that lenders like to give vets discounts and closing costs too. So
yes, there's a lot of that.
That's always benefits you. Yeah. So that 548, if you had a foreclosure, there's something there. If we can get that restored, or if we can, you might still have an entitlement left that you still do no money down, right?
Right.
And then we talked, and then the last one is you can have more than one VA loan at a time.
Absolutely.
Wow, good stuff.
It's
good stuff.
So good. And I forgot to mention, if you've had a foreclosure, short sale, or a bankruptcy, VA just requires a 2-year waiting period from the time that it discharges or sheriff sales. So if you had a foreclosure back in 2010, you're good, right? But if you just had a foreclosure last year, you got to wait one more year. So it's a 2-year wait rule for one of those things. Just see if
we know that waiting stuff. I mean, hurry up and wait. It's a mantra, right? You've got Semper Fi, hurry up and wait. Non-CV said patrie, hurry up and wait. Aim high, hurry up and wait. Well, we know that one.
And I want to say one more thing. Sorry, Isaac. Everybody on this, please share this, or also I want you to be able to also hear this out, because this is the truth. And the biggest discrepancy I see every single month, I've been doing this 12 years now, doing VA home loans. I get a lot of people tell me they think, and they were told, or they thought that the VA mortgage interest rate is the same wherever they go. That the VA rate is just the VA rate.
Yeah.
Oh, I didn't know interest rates.
That's the other one. Yeah.
So that is not true at all. It's the farthest from the truth. I want you guys to take this for definitely what it's worth, because my heart and Isaac's heart is we want every military man and woman to get what they deserve, get the truth, get the right information, and then make an educated decision themselves, not being told one thing and whatnot. But a lot of lenders, you have your mortgage brokers, your banks, and your credit unions. Those are the 3 lenders that'll do VA home loans. Not all of them do them. And then the ones that do them, if they don't service their VA home loans internally, they sell them off to other lenders. And then those servicers are the ones that are controlling the interest rates to the lender you're talking to. So I've seen discrepancies, guys. I'm not lying to you. I've seen discrepancies, especially last year. Client calls me, says, I went to so-and-so and got a rate, but then mine was 1% lower. 1%. So you should always
1%?
a full percent lower. So, I mean, that's not just $50. That was like almost $400 or $500 a month. So
Yeah.
doing a VA home loan, you definitely need to go with somebody you trust, somebody that's got service, but it's never a bad thing to get 1 or 2 quotes. Go with somebody, that maybe you've gotten a recommendation from, maybe a friend, family, real estate agent, somebody that's already used this person, and then go online and ask around and get a second or third quote. You're going to be shocked and surprised because you got to do both. Service matters for sure. But this interest rate thing, guys, there is a huge discrepancy in VA home loans in this country with certain lenders that just are charging more versus others. So please, please, please do yourself a favor and definitely look at kind of somewhere in the middle so that you get yourself a good deal.
Outstanding. So, we're going to wrap it up here. We did a little bit of a data dump on you, but we're going to talk more about it because as we continue the conversation, right, we're going to go next episode. We're going to talk about the, pre-qualification and pre-approval, 2 different things, right? So we want to make sure that we understand the distinction, how that plays out in your buying and selling, or in your buying, and then what you're looking for that matches your budget. So we want to make sure, because all of these things that we talked about already, the entitlement, the loan limits, all of that stuff, that matters into that pre-qual, into that pre-approval stages. So, I appreciate you stopping by, checking us out. And, we're always looking for feedback. This is Moving Our Vets podcast. We love it. There's a place in our heart for it. So share with us what it is that you've got questions on. So thanks again. This is Isaac Contreras and Travis Lang with Moving Our Vets podcast. Take care, y'all.
See you guys. Perfect.
All right.
That was good. That was a lot of info.
Yeah, that went good. I was being very mindful of your 9:30.
Yeah. It's all right, brother. It's all right. I loved our conversation before the podcast. I think that was incredible. So I'm glad we had that.